The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Hello and welcome to Squawk Box. Here are your headlines today. The bifurcation on Wall Street continues, with tech stocks pushing the Nasdaq to its worst session since December 2022. But the Dow bucks the trend, closing above 41,000 for the first time. US President Joe Biden tests positive for COVID as pressure grows on him to step out of the presidential race, while Trump's vice president pick, JD Vance, invokes JFK at the Republican National Convention.
Even in his most perilous moment, we were on his mind. His instinct was for us, for our country, to call us to something higher, to something greater, to once again be citizens who ask what our country needs of us.
It's decision day for the ECB, with Europe's central bank all but certain to keep rates on hold, but leave the door open to at least one cut later this year. And the Swiss engineering and robotics giant ABB reporting record operational margins, confirming its 2024 guidance. This as net profit tops $1 billion.
And EU Commission President Ursula von der Leyen faces a key vote in her second term, while here in the UK, Sir Keir Starmer prepares to welcome European leaders in what he hopes is a reset for relations.
There's a lot to take in already, actually, in these Novartis numbers, which have just hit the wires. And they had a fair wind behind them after the first quarter. If you've looked at the share price on this company, it's had a stunning rally off its lows to circa 99 Swissy on the back of those first quarter numbers back in April, where we had a beat and higher expectations going forward. And I think we've got about the same now, really. For instance, the group is delivering strong sales growth and core margin expansion in the second quarter and raising the full year 2024 bottom line guidance. There's a lot in here. Core operating income margin up 39.6%, up 270 basis points, mainly driven by higher net sales. Faz Narasimhan, the CEO, has led a push to cut costs and jobs, focus on fewer therapeutic and geographic markets. Also has the generic Sandoz business, of course, was spun off late last year. The operating income up 47%, net income up 49% as well. Drugs that were key last time around, Cosentyx, the arthritis drug, the heart failure drug Entresto, which is going to lose its patent next year as well, have also been strong drivers by and by for this company as well. So full year 2024 guidance raised for core operating income based on strong momentum. Net sales expected to grow high single to low double digit. That is unchanged. No operating results in second quarter related to Sandoz spin-off. By and large, a pretty positive story over at Novartis. By and large, I think the analysts seem to like this one. A little bit of upgrade going around. Just to confirm, our US colleagues will be speaking with the Novartis CEO, Faz Narasimhan. That is a first on CNBC interview, 19:30 Central European time.
I'm going to take you to what we're seeing on markets, because we have potentially a significant market event playing out as investors take stock of the chip stocks and what we've seen very much the trade of 2024 to pile into these big names, the so-called picks and shovels in the AI race. And markets now questioning whether there are too many trade wins ahead to be largely holding these stocks. So what you've seen over the course of the last 24 hours plus, a sell-off taking place not just in the US semiconductor stocks, but also globally. This triggered by concerns as to whether Joe Biden may be cracking down on the use of some of this advanced technology across borders in China. Also comments by Trump as well, and this in conversation to Bloomberg as well, in terms of what he may do if he becomes US president again. So these mounting fears around trade trade very much impacting the sector. And you can see just how split the performance was. This slide of 2.7% versus the Dow that was again trading positive. So very much a split performance. 6 positive session for the Dow, again climbing to a fresh all-time high, but for the Nasdaq, and this is a stunning figure, the first day since May 2001, that's right, 2001, way back in history when the Nasdaq has dropped more than 2.5%. So what we had here, that reversal thanks to the ETF that contained a lot of those big semiconductor stocks. Take a look at big tech and you can see the concerns mounting across the board. FANG names as well in reverse. Apple down 2.5%, Microsoft sliding more than 1%, more advanced selling those, you can see 6.6% down on Nvidia, Meta stock, one of the AI names, down 5.6%, and Tesla losing to the tune of 3+%. Intel was one rare patch of green. I want to take you to that semiconductor route that we saw for the Philadelphia Semiconductor Index, which does have the likes of Nvidia, TSMC, Intel. We saw about 496 billion wiped off the value of these names. The plunge that you saw, 50% on that trade. So far year to date, I mean, it's been extraordinary. You can see still up more than 100%, but fairly significant pullback in that trade. I want to take you to what we're seeing elsewhere on the VIX and the volatility gauge and what it's spelling out. We have ramped up, as you can see, but still from very low levels and trading off the 15 level, but a spike of 9.7%. So clearly it is a move where the market is taking stock. Is it worthwhile thinking about the future of some of these FANG names and in particular the semiconductor stocks?
We've got a lot of politics about which you're reading after we finish this markets chat, and then we're going to have a separate chat about politics. But actually, I think these two conversations are stunningly interlinked. And it is very easy for people to say the Trump comments, the Trump moving ahead of Biden in the polls, the Vance comments as well, the concerns about what America first means, what it means for big tech companies, what it means for global isolation, what it means on tariffs, Taiwan protection, etc., etc., etc. It's very easy and arguably wrong to say that is the catalyst for what's going on. Because if you look at actually where, for instance, Nvidia has been, the high for Nvidia was actually well before all of this, and actually has been coming off. So actually, I'm wondering if, whilst there's no doubt about it, there is a contribution from the political conversation going on here and concerns about what Donald Trump means for big business, what he means for big tech, what it means for US position in the world. Whilst there are obviously concerns about that, and that is playing into the market, I'm wondering if that's pushing against an open door that was already happening. There was already a move lower in some of these key tech names. There was always already, and as we've been having the conversation already, people waiting for the catalyst for the market to broaden its exposure. And I think that statistic you mentioned there about 2001 is quite staggering, i.e. the Dow gaining while the Nasdaq lost 2.5% plus.
I think we heard it around the set. There'd been niggling fears around the valuation of Nvidia, but then the market didn't really know how to trade around it because it is one of the massive AI plays. And of course, the revenue has been reinforcing the narrative about the stock market action. But the niggling fears being there, some have thought there was better value to be picked up elsewhere in the markets. So that had been a conversation we were having. However, I think on top of it, this momentum is now coming into the mix where people are looking at what Joe Biden is up to. This is even before we're talking about potential change of presidency, that he may use the foreign direct product rule in terms of wide sweeping regulation to restrict sales of critical chip making equipment to China. This has a flow-on effect for the entire supply chain in the chip industry. So concerns even before November that Joe Biden could get even more active than he has been. Let's face it, he's not been lax when it comes to chips. He's used the CHIPS Act while he's been president. On top of that, we're now talking about whether there could be a change in some sort of security policy that we've witnessed under Biden around pushing back against saber rattling from China in Taiwan. Any change here that Trump is potentially spelling out is just another fear on top of existing concerns around the tariff regime changes.
You can reassure all you like, whether you're Biden, whether you're Trump, but the position of TSMC and its foundry business in the region of Taiwan is important for the global chip supply chain. It is unarguable. Not only important, it's actually at the core of the global supply chain as well. And there is no reshoring over a Trump presidency that can negate that for the global chip industry. So let us go down a very tortuous path. If the US were to talk about withdrawing security for Taiwan, unless Taiwan were, for want of a better word, held ransom to pay more for that US security. By the way, Taiwan does buy a vast amount of US military equipment, just pointing that out as well, which provides a vast source of income for a large number of US military organizations as well. If the US were to do that, and there were problematic bellicose noises from China, which actually moved beyond that and became something a little bit more troubling as well, that's going to affect every company in the world because they all rely on chips. That is not going to leave the US immune, regardless of what reshoring it does as well. Donald Trump is a businessman. He either does know this and is being lenient and true, or doesn't know it, in which case that's perhaps more worrying.
Yeah, or maybe it's just something about longer term policy and planning for the future to ensure that there is adequate chip production on American shores. So that may say something about sort of incentives.
Even if there is adequate chip production on US shores, that is not going to insulate the US from what would be a global crisis were China to have a more bellicose and aggressive set of actions towards Taiwan.
You're right to push back against the narrative, and the question is, where does that leave us on the uncertainty? I mean, I think we're still there in terms of what Trump would do and whether he would be more nuanced, to your point, because there are rationalities here that may kick in. But I think at this stage, the market is not looking at any of the practicalities. They're just concerned that there will be a change in the narrative, and that heightened fear we've seen in the past can cause a sell-off. And I think the heightened fear is doing that right here and now.
I think we sometimes make the mistake of thinking Donald Trump and, dare I say it, Viktor Orban are pure politicians. Someone once said to me quite recently, you need to reframe your thought process when you look at people like Donald Trump and Viktor Orban, who is the Hungarian Prime Minister, of course. This isn't just about pure politics and real economics and real politique. This is about doing deals. And it's about what can I get? It's about the quid pro quo. So everything Donald Trump does, according to this commentator, has to be framed in the prism of what can I get back? What can I extract? I can say I'm going to do this, but maybe there's a deal to be cut as well. And I think that's probably a fair analysis of how Donald Trump carries out his business. I'm not saying other politicians don't, but perhaps they come at it more from a political point of view. Donald Trump comes at it from more of a business transactional point of view.
In the meantime, if there are concerns, where does it leave the AI trade? Do we see a pullback and then money spent elsewhere or reallocated to, say, smaller cap stocks, more breadth? I mean, I think the Trump trade that's been very evident this week has gone into industrials, manufacturing, small cap stocks as well. So does that continue for the time being? I think there are also question marks, and something our team was looking at, just how friendly JD Vance is with Silicon Valley, and there's a view that he may not be that friendly to the FANG stocks, the very large cap technology names that are seen as gatekeepers. And don't forget, Europe has problems with these companies as well in terms of their market cap and their market dominance. And some of the comments he's made, he wants to see the rest of Silicon Valley be able to grow and to challenge some of the lines in the space. If that is the case, don't forget, these are the big cap stocks that are spending money. They're the hyperscalers spending money on AI.
But there is another hyperscaler out there. Well. And there is another hyperscaler on AI out there. In fact, there are many. And one of them is the Chinese Communist Party. And if you extract power, and we saw this with Chinese tech companies, when you take away their power, as Xi Jinping did, you're left with a vacuum. And if the US wants to take away the power from US tech companies, be very careful what you wish for. Is that going to open the door for competition from somewhere you don't, rather than small companies coming up the rails? Is this actually going to open up the door, as it has on solar panels, for instance, to the Chinese to become the dominant players in the brand new technology?
Yeah, that's a good point. Let's push on to the politics stateside, as US President Joe Biden has tested positive for COVID-19 for a second time and is experiencing mild symptoms, according to the White House. Biden arrived back in Delaware, where he will continue to carry out official duties in full whilst self-isolating. The president is reportedly facing concerns from top allies on his candidacy, with sources telling NBC News that Senate Majority Leader Chuck Schumer presented him with the recent polling data in a blunt meeting on Saturday. The sources would not confirm whether Schumer called on Biden to drop out of the race, something a spokesperson for Schumer called, quote, idle speculation. Meanwhile, former House Speaker Nancy Pelosi has reportedly told the president that polls show he cannot beat former President Trump, warning Biden that he could destroy Democrats' chances of regaining control of the House if he continues his re-election bid. That is according to CNN, citing 4 sources briefed on the call. Politico also reported Pelosi told Biden she and other Democratic lawmakers worry he is dragging down the party. California House Democrat, meantime, and Senate candidate Adam Schiff has publicly called on Biden to exit the race. Schiff is one of the most prominent Democrats to call on Biden to step aside and is the 20th sitting party lawmaker to do so. Ohio Senator JD Vance has officially accepted the nomination to be Donald Trump's running mate. In a wide-ranging speech to the Republican National Convention, Vance criticized President Biden's policies, portraying former President Trump as, quote, America's best hope. Vance addressed Saturday's assassination attempt on Trump, saying the former president's response shows dedication to party and country.
What did he call us to do for our country? To fight for America. Even in his most perilous moment, we were on his mind. His instinct was for us, for our country, to call us to something higher, to something greater, to once again be citizens who ask what our country needs of us. I stand here humbled, and I'm overwhelmed with gratitude to say I officially accept your nomination to be Vice President of the United States of America.
Let's get more on the RNC with Martha Kellner, who is US correspondent at Sky News. Martha, it has been an extraordinary week already, and we've not even heard from Donald Trump yet.
Yeah, I've got whiplash from the news cycle over here in America. We heard this evening at the Republican National Convention for the first time publicly from Donald Trump's new running mate, JD Vance. It was his opportunity to introduce himself to a national TV primetime audience. He was introduced by his wife, Usha, who he met at Yale Law School. The first half of the speech from JD Vance felt like an exercise in kissing the ring of Donald Trump. It was very deferential, the sort of respect that Donald Trump might expect from his number two. The second half of JD Vance's speech was more autobiographical. It was about his upbringing in an impoverished household in Ohio, and the largest cheer of the night from the crowd inside this arena was reserved for JD Vance's mother. She was sitting inside the family box alongside Donald Trump. JD Vance spoke about her struggles with drug addiction and how she had been sober for almost clean for almost 10 years now. He joked that when she celebrates her official sobriety anniversary in January 2025, he hoped he could have a celebration for her inside the White House. The mood here has been jubilant and expectant almost. They believe that they are riding this wave towards the White House, and it's in stark contrast to the Democratic parties and the struggles of Joe Biden. Of course, we had the news today that he tested positive for COVID-19. So as he fights for his political career, he's now doing it in self-isolation, and it really does feel like the crows in Washington DC are circling above him. Perhaps the most high-profile Democratic Party member in Congressman Adam Schiff coming out today to call for Joe Biden's resignation. So pressure building on Joe Biden, even as he's suffering with COVID-19. We're told he has mild symptoms, just a cough and a runny nose at the moment.
Martha, thank you so much for bringing us up to speed on the political backdrop there. Martha Kellner, US correspondent, Sky News. Coming up on the show, it's ECB decision day, with the central bank expected to keep interest rates on hold today. We'll have more next. Plus, Wall Street semiconductor index sheds more than $500 billion in market value as the US mulls tighter export restrictions. And don't miss our earnings interview with interim CEO Andres Rubio. That is a first on CNBC at 8:30 CET.
Listen to CNBC's Beyond the Valley, the podcast that explores the biggest tech news from across the globe. Join me, Arjun Karpal.
And me, Tom Chitty, every week as we bring you insights into the top stories, unpack the latest trends, and find out where the industry is headed.
Now available on Spotify, Apple Music, and Google Podcasts.
There's so much going on markets today, and clearly these risk-off moves on semiconductor stocks. But don't forget, it's also decision day for the ECB. After last month's first cut of the cycle, the central bank is all but certain to keep interest rates on hold at this meeting. You can see that just a 5.1% chance for a follow-up rate cut here. Investors turning their attention to the future, with markets currently seeing a more than 80% chance of a cut in September. And we'll also have those latest forecasts from ECB economists. More than 4/5 of economists polled by Reuters see 2 further ECB cuts this year, in September and then in December. That view is backed up by traders, with markets currently pricing in more than 1 in 2 chance of 50 basis points of easing by the end of this year. And let's get out to Annette for more from Frankfurt. Annette, curious, I think as far back as April, when I was talking to a lot of the Governing Council members, they were unwilling to commit to a follow-up rate cut in July if they'd already cut the prior month. It seems the data this time round on services still proving too stubborn to provide comfort.
Yes, exactly. I think that's a fair summary, Karen, and that hasn't changed so much because the June rate cut was well telegraphed and everybody was like on one page that it's good to have a first rate cut in June. But then if you look at what the narrative was in Sintra, they are much more cautious by now, looking at the wage factor when it comes to the inflation dynamic, and wage growth is still far too high to the ECB's liking, running at roughly 5% for the euro area as an aggregate, and also service price inflation sitting at roughly at 4% is far too high, and that could actually trigger more inflationary pressure, and that is what the ECB wants to look at more carefully and needs more time to actually assess the data and think about when it's good to have another rate cut. So September is very likely because then we also get a new round of staff projection from the ECB, most likely showing that perhaps the economy could cool down a little bit more. If you look at recent sentiment indicators, be it the PMIs, be it the ZEW here for Germany, they all show a market cooling of the manufacturing space once again, and that is down on global orders, which are coming in less forcefully than expected before. So I guess this is a component the ECB is watching out very carefully. But then comes the service sector, which still seems to run quite hot, and the labour market is not in a state where we think that the pressure is actually diminishing on wage development, because employment is still running really high across the euro area. So that's the picture the ECB is looking at. So at the same time, they of course also look at political uncertainties, be it the possibility that another Trump administration might raise tariffs, which then also could add on to inflationary tendencies. So in a nutshell, there are loads of uncertainties out there, but I think the assessment is quite fair, and that's what economists do think as well, and also the ECB Governing Council members, at least what I gathered in Sintra, is that 2 more rate cuts this year are on the table, on each one probably at 25 basis points.
Annette, thank you very much for giving us the background there. Let's get to Klaus Vistesen, who is Chief Eurozone Economist at Pantheon Macroeconomics. Klaus, welcome back to the show. Let me just ask you about your expectations for today, because the market thinks standing pat, but some signalling around September. What's your view on this?
So the ECB will definitely hold rates steady today. I don't think there's any doubt on that. But the big question will be whether we get any indication that the ECB is a little bit more willing than they have been in the past few weeks to, open the door for that September rate cut, which, as you say, is now widely expected, right? So the introductory statement probably won't have any indication, but journalists will ask out about this many, many times, and so the question is whether she'll sort of open the door for, if the forecasts remain the way they are, whether they'll cut interest rates in September as well. That's what we expect, but again, the near-term data, services inflation in particular, aren't looking really good. So, they could also take the other side and say, look, we need more data. So again, I think actually there's a little bit there's quite a wide range of outcomes here in terms of their communication.
Klaus, the problem with the Eurozone, there's also a wide range of inflation levels that we're witnessing. So getting back to target still seems quite challenging, even though some economies are already there or under, others are well above the target inflation rate. How do we get to that last mile equation when still we've got international forces at play here?
Well, look, in the Eurozone right now, it is about services. Services inflation is at 4%. It's not really moving. In fact, over the next couple of months, it probably won't move at all. There's some one-off boost to services inflation from the Olympics in France. Probably that's going to keep services inflation high. So it's about how confident the ECB is in its own forecast that inflation is going to come down next year, which will allow them to cut rates a bit further. If you go back to the June meeting, Ms. Lagarde was talking about the confidence that they had an increased confidence because their late 2025 forecast had been or have been close to 2% for a while now. So it's sort of how they balance the near-term picture, which isn't looking very good actually in terms of still high inflation, with the sort of medium-term picture where for a while now they've had decent forecasts, right? You know, inflation falling to maybe not exactly 2%, but at least somewhere close to that.
Klaus, it all seems very calm when I look at when I listen to your conversation between you and Karen about the policy options. When I look at the fiscal side of things, when I look at the political side of things, then that's when the chaos starts. How much are the fiscal and political woes of a lot of European leaders going to affect the Eurozone economy and actually take this beyond the ability of the ECB to augur a soft landing?
It could be a huge swing factor for economic growth this year. I mean, we know the fiscal rules are coming back this year from the EU. Italy and France have been put on notice, right, that they have to consolidate their finances. We know that's going to be very controversial in both countries. Our view, you know, just to make that 100% clear, we think that the EU's fiscal rules are more bark than bite. I mean, in a way that, you know, fiscal deficits are now wider. We think countries will be given more time, but there are both EU dynamics and domestic policy dynamics in play, and it's very uncertain. September in France, for example, will be a huge month. We know that that's when a new government has to come into place. They're going to have to discuss their own budget, the pension reform, which is very controversial. And then at the end of September, they have to submit something to the EU, right, where they say, look, this is our plan for fiscal policy. So, yeah, there's a lot of uncertainty. From the ECB's perspective, they've been saying, look, we want a little bit tighter fiscal policies to get inflation down. But Klaus, the whole uncertainty around that, that could come back to bite them. And it's very difficult for the ECB to react to that in real time because in a way they're bystanders in a way.
Yeah. So just in the early part of your answer, and I love the whole answer, but the early part you said that we think there's more latitude in the fiscal. So just to confirm once again, as is the history of since we've had the euro, the fiscal rules for Europe, they're not actually fiscal rules. They're fiscal rules-ish because they're going to have larger deficits than actually the rules suggest they're allowed.
100%. And in fact, if you look at how the new rules are designed, they are also designed with a lot of sort of opt-outs, a lot of sort of caveats. You know, if countries do X, Y, Z set that are seen to be good types of fiscal policy, you know, they can run higher deficits, that they can put down a plan, and the plans can take and they can get longer time. So again, I think from the point of view of that's certainly true. But remember, the market is there as well. The bond market can have a say, and the bond market can react very, very quickly and impose very, very tight constraints on governments. I mean, almost instantly, right? So again, there's that dynamic in play as well.
Well, yeah, Klaus, I've got to go, but I wanted to challenge you on that because actually the bond market will try and impose those rules, but then you've got, I can hear the European version of the 7th Cavalry with TPI and other kind of protective instruments, but we're going to have to leave that cliffhanger, Klaus, because we've gone over by 3 minutes already. We'll chat again soon. I love the conversation. Klaus Vistesen, who is Chief Eurozone Economist at Pantheon Macroeconomics.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabi Lekumete, weekdays on CNBC.